Hey traders, Ivan Delgado here, Maxas commentator at Global Prime Brokerage Firm. So as usual, I'm going to be delivering to your doorstep the technical outlook for the main Forex indices heading into this new week. Now, remember, these views are going to be relevant and actionable for both the members of my mentor room, but also the wider public, those that participate on our conversations through the Global Prime Discord room. And one of the things that I always mention and I wanted to reiterate is that, humbly speaking, I am yet to find other traders that are going to be conducting the technical study of the charts the way that I do it, by putting together currency indices on an equally weighted basis and distilling what is going to be most likely the path of this resistance. Now, interestingly, as a top level summary, this week what I've noticed is that the majority of FX indices have simultaneously landed at key inflection points. And by that, what I mean is that the price is sitting at areas that often represent either a pivotal area for an eventual price reversal of the recent momentum, or alternatively, an acceleration of gains or losses. The bottom line here is that we seem to be on the verge of a market that is about to make some big decisions in terms of levels that will either hold or break. Okay, now it's going to make it quite tricky to pick the next directional biases, precisely for the reasons that I'm outlining, because there's this, these clusters of bids and offers that are in the process of either being consumed or acting as walls too strong to penetrate the jury still out there. So without any further ado, let's dive into the chart. The first one I want to present to you is the Euro Index here. And what I noticed is that we've had a topside failure at this resistance level that was outlined weeks and weeks ago. So what I'm seeing here is that the next directional trajectory for the euro remains a rather convoluted puzzle to decipher until we have this break of resistance. This is going to now ironically make the euro and euro long positions quite tricky and risky, and rather dangerous business. And the reason being, as I said, is because unless we get out of this confinements of about a 1% range that we have from the top to the bottom, this line here representing the midpoint of the Euro Index range, unless we see a breakout of this edge, then it is going to be, really asking for trouble trading into this resistance. Notice that many times in the past, this resistance has acted very reliably. So it is definitely a very dangerous terrain here to be navigating until we have buyers on a weekly basis breaking and closing beyond this line. Notice that we did have an attempt, and this is a major absorption and should be a warning sign of how much sell side interest remains above this resistance. Okay, something that you have to be very well aware of. The window, in my opinion, to long the euro on the basis that a topside range retest would occur is already gone. You had back-to-back candles here. This obviously communicated that there was an impetus to reject lower prices, and eventually you could have concluded, as I did last week, that the path of this resistance on the close of this candle would have been to retest the range top. This is what we've already seen. And as I said, now it's just a matter of being patiently waiting for the next price signals. Now, when it comes to the CHF index, at last we have landed at this structural resistance. And by structural, what I mean essentially is that we did have a very well-defined, isolated point in the chart that once we got this point broken, notice that we had this acceleration to the downside. So, as I said in my top level summary, we are at this inflection point where either we are going to be reversing back down, or we actually might see that the price really starts to accelerate the gains that we've seen, and on the basis that we are breaking past this structural point in the CHF index. In my opinion, this is a market that for the time being remains once again quite tricky, and the reason being, as I said, this structural point constitutes a huge nut to crack. I would be quite surprised, to be honest, if the price doesn't exhibit any response and we just essentially continue higher and higher. Notice that on a closing basis, we have literally closed at that line, and essentially that to me translates in a market that it is capping this top side direction by having clusters of offers that are sitting right around this level. Another point to really bear in mind is that this rise, in my opinion, remains rather corrective in nature. Like if you were to compare this swing we had here with this swing we got here, notice that this one had a lot more acceleration and velocity, whereas this one, there's a bunch of mixed candles. Yes, there's definitely been a lot of relentlessness and a lot of stubbornness by buyers buying every single dip, but now that we've made it all the way to this point, it is definitely going to create more challenges for this amplitude of movements to keep going higher and higher, okay, as part of this correction. So as I said, it is now time to pause, rethink, reassess, and next week hopefully we get a better picture in the CHF index. Also notice that the volume has been tapering off here in the last week, so that is not going to be boding well for the interest of buyers. Next up is going to be the US dollar index. Now the US dollar index, notice here that continues to be sitting on a very important level of support. This support got first tested around the first week of 2021. It got retested mid-February, and it is once again being revisited around the first week of, or second week of May. And now notice what we've printed. We have printed what is often referred to as a dojo type candle, and this portrays uncertainty in the short term. The chart, in my opinion, in the US dollar index remains rather fragile, and an acceleration of these losses may actually occur as long as we compromise this structure with a close that is going to occur beyond this red line. If that were to occur, I would say that this is a market that really can amplify the losses for the next few months, not even weeks, months. I mean, that's how big of a deal protecting this level for buyers is at this point in time. My thoughts is, kind of like considering all the elements and factors, I continue to sit on the camp that speculates that eventually we are going to see a resumption of this downtrend. Notice that the downtrend on a macro picture has been pretty strong ever since the COVID-19 highs. So I would be surprised that this level eventually holds. Notice that we've gone through stages in the past where we had tests of supports, and eventually that gave way to another resumption. Here we had tests of support, led way to another resumption. So there's, I guess the preponderance of evidence, technically speaking, ever since the COVID suggests that the US dollar will remain vulnerable to further downward breakouts. Next up is going to be the Japanese yen index. In my opinion, this is a chart that for the time being has paused its downtrend, but it doesn't mean that it has terminated that downtrend. The index has been, for now, resisting further moves down after leaving this 2-month range. Now the candle formation from last week makes us none the wiser. It just simply communicates a pause in an otherwise well anchored bearish market. I personally still envision the potential for this market to keep selling off until this 100% projection. By now you know the way that I identify these areas. Essentially the tech was the last bracketed area, and I am going to be duplicating that area, and that tends to be many times over, not obviously all the time. That would be obviously preposterous of me to think that we always going to get it right, but that would be the next target area when it comes to the Japanese yen index. Okay, there's nothing that suggests that the Japanese yen bulls are turning a corner and are starting to regain control. Okay, there's actually a big steep climb here for those for the technicals to actually improve in the short term. Okay, so I continue to actually think that the solid play here, and the one that has been proven to be the side that players have capitalized the most, is to be supporting the downside. Structural momentum are certainly suggesting so So that's the camp where I'm sitting on. Next up, GBP Index. Now, another one here you can see that is facing a key level of resistance. I did point out that this is going to be a tough nut to crack. We did see a continuation, which is not rare to occur. Notice that in the previous candle we had an increase in a tick volume, and I said that based on structural momentum, as you can tell here through these proprietary indicators, the FT and the SMT, we might continue to push higher and higher. Now notice that now the tick volume is starting to taper off into this level, so it doesn't really bode well for buyers. And as I said in my report, if you want to be going long the GBP this week, it's going to be a risky business until we see a close beyond this line. You have to recognize that now the GBP is at a point where offers have been overpowering the enthusiasm, the desire to keep beating this market and finding extensions to the upside. Remember also that this resistance has proven quite reliable through this period. Okay, so we actually had attempts for over 6 weeks. We did have a bit of a poke beyond this line, but immediately was rejected through a very sizable bearish outside candle. So again, we need that confirmation, that blessing of the market, that we have first that equilibrium found beyond this line. If that is the case, then we can start to fantasize with further gains. Until that happens, it will just essentially remain a fantasy and not something that is backed up by objective observations of price action. Okay, at this point. So there you have it. That's my view when it comes to the GBP Index. Up next is the CAD Index. So the CAD Index, I would consider this as a market that also it's sitting at a key inflection point with strong momentum still to be reverting to the opposite direction. Notice here how huge this level is, how many times the CAD has gone all the way up to this level, and eventually it went back down for a pretty punchy movement all the way to the previous range bottom. Okay, so we are at that kind of a crossroads once again in the CAD Index. There's no ambiguity here. The CAD has been rocking, and I gotta say that in the very short term, I remain skeptical to think that we're just gonna see a sudden drop in the CAD Index, even though the location where it trades, it does suggest that eventually that may happen. But this momentum has been too strong, and I would not actually be disregarding that we might continue all the way to the 100% projection. If that is the case, we actually might defy gravity and continue for another 0.5 to 0.6% gain. So that's one scenario that may play out. Another obviously is that with the volume decreasing on the way up, this actually might pose a challenge for buyers to actually keep moving this market further and further up. So the jury definitely still out there. We are not there yet in terms of getting signals that would suggest the next directional bias. By default, I would say that structural momentum would suggest and imply that we have further room to the upside. But since we have landed at this key resistance, and it looks like this resistance is it's like buyers are finding it pretty hard, it's not what I really want to see. Like going long a market where we have reached literally that resistance, it is going to be more difficult. Obviously, if you're a scalper, a momentum trader, you definitely can consider to jump on the bandwagon based on your strategies that you tend to deploy. Okay, so bottom line, with such strong momentum, I think that we might have further room to the upside, considering that this is a market that has been traveling north for the majority of candles this year, at least ever since February the 22nd. But eventually, I really think that a top information may be found, although it might take time to mature. Okay, so that's kind of like breaking down all my thoughts and how I see it in the CAD Index. Okay, I mean, just look at where we at in the grand scheme of things, right? Next, the Aussie. So the Aussie index, in my opinion, this is the market that had been ranging. Okay, I mean, it's not my opinion, it's something that you can obviously look at the factual and objective data and now tell that finally this range has been broken to the downside. Now, what this makes me is more bearish than in previous weeks. I think that a depreciation of the Aussie to the tune of about, another 0.5% or so until we reach this 100% projection is in store. Or, 0. Let's just calculate that from the previous close, about 0.65%, and that would be a 100% projection away from this identified bracketed area. Okay, the candle close in the prior Friday also suggests that there was, by being at this absolute lowest point for the week, beyond the range floor, this to me implies that in the near term the prospects for the Aussie have definitely darkened, and there was almost zero buy side pressure, and whenever that happens, that should make you worry. All right, so further downward pressure for the Aussie appears to be the path of least resistance short term. And last but not least, the New Zealand dollar index, which appears to be now sitting at a level of support, and it is also, as in the case of the Aussie, lacking buyers' presence at this level of support. Now, does it make me automatically support or advocate for buys or shorts? Not really. So what I find here is that unlike the Aussie, the New Zealand dollar here is yet to break its range structure. Notice that this would be the floor of this identified range. We had a depletion of volatility that's been shrinking, and we've already got two levels that got rejected to the downside. So to me, this confirms that we have a range that is at play right now, and the Kiwi has to now make a decision. Either we're going to see a bounce or we're going to see an acceleration of losses by breaking below. Okay, it didn't achieve. Notice that it didn't achieve a successful rotation on the way up. We would have wanted to see that the price actually, at the very minimum, is closing beyond that level, and if that had to, had been the case, we would have been targeting that area. It did not materialize. We also noticed that it took quite a while, like 1, 2, 3, 4, 5, 6 to 7 candles to recover what actually represented a very sharp movement within one candle. So obviously this is starting to, kind of portray a picture where sellers also notice that on those way down, it has been quite impulsive in nature. Once again, this selling. So notice that sellers, it only takes them 1 week to make enough ground to kind of make up for 6 or 7 weeks of gains by buyers. So that should be quite worrisome, right? So bottom line, structurally wise, it looks like this market starting to show some cracks, but we really need to see that close beyond this red line to really clarify procedures. Okay, so I do not have a high conviction judgment at this point, but I certainly am starting to detect that this market shows some worrying cracks. Now, if we are going to break beyond this point, it would suggest that this area of prior resistance tested multiple times would be the next destination for the New Zealand dollar. All right, and with that being said, I beg you all do. I hope that you have enjoyed once again this content. If this is something that helps you along the week with your decisions, it gives you more clarity, it gives you more insights on stuff that you may have not considered by scanning through this FX index on an equally weighted basis. Please smash the like button, make comments, subscribe to the channel, and I will make sure that I bring more knowledge bombs, more golden nuggets to your way. Until the next video is bye for me. Cheers.